Hi everyone, hope you guys are all doing well. Just wanted to do a quick video here discussing a topic I've seen quite frequently in the news over the last couple of weeks, and that topic is why the banks aren't lending out their excess reserves. And I just want to try to use that topic to be as the basis of an argument for why I think there's going to be quite a large wave of inflation coming sometime in the future. Now, I'm just starting here on the Federal Reserve website, and I just want to point out the total amount of excess reserves currently sitting on deposit with the Fed. And right now, or at least as of November 13th of this year, the total excess reserves is about $2.5 trillion. And if we just look at the increase over the last 12 months since the start of QE3, there has been quite a dramatic rise in the total amount of excess reserves. Again, about 60% has been created over the last year. And if you're not sure what excess reserves are, what those are is when the Fed prints money, what they do is they exchange that money for bonds with the banks. So the banks end up with bonds, and the Fed ends up with the bonds, and the banks end up with the newly printed money. And instead of lending that money out, what the banks do is they just keep that on deposit with the Fed, and the Fed is paying them money to do so. And just looking at this chart here, we can see the dramatic rise that has taken place since 2008 regarding excess reserves on deposit with the Fed. In the last 5 years, it's gone from about zero to, again, this graph is a little bit late in updating, but about $2.5 trillion. Now, as I mentioned, the banks are earning interest on those excess reserves they keep on deposit with the Fed. And right now the Fed is paying them 0.25% just to do nothing, just to keep them on deposit with the Fed. And again, 0.25% doesn't seem like all that much. However, when you're earning that on $2.5 trillion, it does add up to be quite substantial. But also, too, usually when banks lend to each other, right now I read an article, they're usually lending at 0.09%. So just in that regard, they're getting a pretty good deal. And I found this article here from BNN. If we scroll down, it says that since QE started in 2010, again, the Fed has paid over $5 billion to the banks for doing nothing. And of course, that doing nothing is the huge focus here. So, again, that's a pretty well known argument. Again, this article mentions it, and I've also seen quite a bit of other articles mentioning it, that right now the banks aren't taking any risk in lending out those new excess reserves. Again, that makes sense if you just kind of remember that in the last 5 years, the banks got killed on the loans that they made, particularly when the liquidity crisis hit in 2008. So right now, they're not doing anything, not taking any risk, just earning their 0.25%. And also, too, we should also notice that $5 billion hasn't been paid out equally over the last 3 years. Just going back to this chart, again, this huge increase in excess reserves means that the bulk of that $5 billion is being paid out recently as those excess reserves have increased dramatically over the last year. Now, with the recent nomination of Janet Yellen as the new Fed chairman, there's been quite a bit of a push in the mainstream media to cut off that interest rate payment to the banks on their excess reserves. They want to cut off that 0.25%. And the reason why they want to do that is to try to get those excess reserves, all that money, that $2.5 trillion, they want that to be lent out in the economy. And what the Fed thinks that will do is that's going to start to decrease the unemployment rate and also have a positive effect on GDP. Again, if we just look here again at this BNN article, it's quite funny. They say that in theory, it should generate some additional growth and in theory help the unemployment level. So again, that's all Keynesian economics thinking. Again, those are based on those theoretical models, which I don't agree with. But there's quite a bit of articles here. This is just a Yahoo Finance article, again, on cutting the interest rate on the reserves. And here's a Reuters article, too. So it is quite substantial in the mainstream media, but I just want to make note that that $2.5 trillion, it's might have some effect on GDP and on the unemployment level. But if we look at this M2 money stock chart, again, the total money stock in the United States is just under $11 trillion. So if you have that $2.5 trillion start screaming into the economy, yeah, you might have a relative increase, or at least a nominal increase in the GDP, and also maybe a lowering of the unemployment rate. But you're also going to have a huge price inflation as that new money starts entering circulation. And in my opinion, what that's going to do is drive up prices quite substantially, and then also have the effect of lowering the standard of living of your average middle class Americans. So, again, they may want to try to get that new money out, but of course, the unintended consequences, it seems like the Fed never pays attention to them, and they, for some reason, they don't put those in those Keynesian theoretical models. And again, in my opinion, it's just going to lead to more inflation down the road. So I just thought that I would point that out. I hope you guys found that interesting. As always, let me know what you think in the comments section below. Also, too, if you could like the video and subscribe to the channel, my brother and I always greatly appreciate that. Now, I do have some additional videos coming out this week. I'm going to try to do a video on my silver endgame where I just talk a little bit about when I might start to sell silver, or at least, what my long-term plan is for trying to purchase silver and precious metals generally. I also want to do just a follow-up video to the future of American copper penny hoarding. Veritas Files sent me an excellent article that I want to touch on, and I did find some new legislation that might have quite a large effect on the American penny and also the American nickel. So I should have those videos out sometime this week, and I hope you enjoy those as well. But that's it for now, guys. I hope you all have a great day, and I'll see you next video. Bye for now.